Welcome to StockPricer.com. Here is another great, beautiful pick. I really love this company. I love what they do. Everybody in the world understands it. The stock market understands it. I think it's got a lot of strong fundamentals. It's under accumulation. This is a monthly chart of Davidstea Inc. Davidstea.com. It does a lot. I'm talking big revenue in tea. $206 million back in 2019, or 8 quarters ago, and then the last 4 quarters it did 154 million. So that's a 25% drop in sales. However, you got the pandemic to think about that happened. They have hundreds of stores and they're in tons of places. Those stores were places that people got tea, so as it opens up, their revenue will go up and the stock should go up. If you look at the last 90 days, these last 3 months, you can see, and let me just pull this back about a year. So this is about a year worth. You can see out of all of these, and there's a resistance line, and I use some other charting tools to see all of this stuff, but huge accumulation, and there were 3 versus 4, so 4 months of accumulation with only 3 months of distribution, but the 4 months of accumulation were far bigger. And look at this month, one of its biggest months in just a long time. And in fact, let's zoom it out and see. Since the very beginning, no, that's not the very beginning, but since all the way back in here, which is quite a while ago. So you had some huge accumulation in here too. It's getting back up to that point. So Davidstea, I think it's a great pick. Let's jump into the weekly chart and get a little bit more zooming into what's happening now. So you can just see, look at this. So it's crossed over some time ago, okay, maybe 15-16 weeks ago. It crossed over its 50-day moving average. Now it just jumped over its 200-day moving average right here. That's this black line. So this is just a great sign that it's coming back, and it's coming back strong. It's got huge acceleration, huge growth, upside potential. This could be $14 stock. Okay, some areas of resistance are going to be right in here. So about 341, which is right around where it's at right now. That's going to be its ceiling, but it's accelerating and wanting to hit that point there. It broke through this. This was its other resistance. It broke right through it, busted right through it with heavy volume. So I think there's a lot of good signs for this company. I will probably acquire some. I got to figure out a really strong buy point for it. It's got a cup with handle. Let's jump on the daily chart and let me show you that. So this is a small cup with handle. See this cup right here? This little cup, and then here's the handle. And if you look right here, this is the pivot point, is 323, so 10 cents above that, which it is now. So this thing could absolutely, and that's probably one of the reasons why it exploded so much. If we draw a little trend line here, this would have been a great buy point, but I didn't know about it then. I just found this stock over the weekend. So it's still close enough to this pivot point. It'll probably return. You can set a line in the sand. It'll probably return to 333. It's there right now, 335. So I'll be watching this stock pre-opening hours. Kind of curious when the earnings, due. Looks like 6:15. So we've got a lot of time before the earnings are due. Absolutely tremendous. The volume went up 133% on the daily, and if we look at the weekly was down, but the daily was way up in volume on the weekly, on the daily action. So really good buy point, really high volume, and I love tea. Everybody likes tea. Who doesn't like tea? And so here's the concept, here's the play. As the world gets more conscious, people are going to want to drink more tea. They're getting more health conscious, and tea is just a wonderful pastime. It has been. Boston Tea Party, thousands and thousands of Egyptians, go back with all cultures. Everybody loves tea. Tea. So I'm gonna get me some Davidstea. The one negative side is the revenue that is, big time down in revenue. But again, the pandemic is the cause for that. I mean, we can say that that's what 25% down year over year. So from 206 million to 154 million. That's a pretty significant down. Those numbers are all in red. Their PE ratio is 29x. So, 29 times what the company is, I guess, worth, So, that's not good when you're talking about all those millions. Is this company really, projected? It's not like a disruptive kind of technology, but it is tea. They got an angle. They got a great product, and they have the monthly or quarterly tea club. So they send you this box of tea, which is a subscription based model. So people get on that and they're just on it forever, and they never want to let go of that. So the more people they get onto that tea service, where they're just shipping it out to you every single 3 months, you get another box with 50 bags of tea or whatever to take you through the next 3 months before they ship you another. Even when I went to the website, wanted to click it and sample it and do it. I'm ready to get into tea. So I think this is a great play. It's Davidstea, and this analysis was brought to you by stockpricer.com. Thanks for watching.